yeah. Wake up every day, working hard, got so much bills to pay, can't see my way. Living from.
Hi there. Can we talk? Can we talk about mortgages? Yes. Securing a mortgage should be the most fulfilling experience of your life. However, this process sometimes can be a little confusing and indeed frustrating. How is it that we improve on that? Simply join me, McLean, the Mortgage MC, on HGG Radio, Tuesdays, 7 p.m. Mountain Standard Time, as I provide you with simple, professional, and unbiased advice on securing a mortgage. Let's talk about mortgages. Yes, talking mortgages. See you soon.
Oh yeah, oh yeah. Wake up every day, working hard, got so much bills to pay, can't see my way. Living from pay to pay. Busy trying to make ends meet, no time to go down on my knees to pray, but still God gave me grace. I cannot allow this situation to get me down. No way. So I get up, shake myself and speak into my life.
Hi, brothers and sisters. Welcome to Talking Mortgages. My name is McLean and I'm the Mortgage MC. Thanks for joining us again this evening. Lovely intro there. You know, wake up every morning working hard. Have so much bills to pay. Make sure that one of those bills that you have to pay is your mortgage, because that bill will pay you back in the long run. All right? So today we have a very interesting program for you, because we'll be looking at mortgages for persons who are new to Canada, and what are some of the incentives or some of the programs that are there to ensure that that group of people can access a mortgage without much fuss or getting frustrated in the process. All right, so just to remind you, we're on HGG Radio, and the numbers for you to participate via WhatsApp is 825-343-4486. That's 825-343-4486. And again, today's topic is new to Canada mortgages. All right, fabulous. Yep, pay some of those bills. And as I said, hopefully the main bill that you're paying is your mortgage, so it can pay you back in the long run. All right, so how is it that somebody who's new to Canada can access a mortgage? All right, so there are a couple of programs, one really main program with different aspects to it that you can utilize as a person who is new to Canada in order to access a mortgage. And the main features of this program, which we're just going to call the New to Canada program, right, is that it allows access to permanent and non-permanent residents to get a mortgage. Two, it has no minimum period for residency. Doesn't have a minimum period. And a lot of people think that, I have to come and I have to be here 6 months, a year, 2 years before I can buy a house. Nah, you don't have to wait that long. Alternatives. Three is that there are alternative sources of establishing credit worthiness, and these will be considered for permanent residents. And 4 is that the mortgage loan insurance is limited to the purchase of a one-unit property that is owner-occupied, and this is for non-permanent residents. All right. So fabulous. So those are the 4 main features of this program, but we're going to delve into them. And so for newcomers to Canada with permanent resident status, you have access to all of the CMHC homeowners mortgage loan insurance products with a minimum down payment starting at 5%. if there's limited Canadian credit history and where we cannot utilize a foreign credit bureau, CMHC will, and CMHC is the insurer now, not the lender, right? But they need it because if you're putting 5% down, it has to go to a mortgage insurer. In this case, for the New to Canada program, it's mainly CMHC. The other two insurers will look at it, but it's mainly CMHC, right? So they look at other alternative sources of credit that you can use if you have limited Canadian credit history. Because ideally, you want to have your credit history that is required is that you have two lines of or two sources of credit for a minimum of 2 years. So those two sources of credit usually is like a credit card, a line of credit, a car loan, any other form of credit that you pay probably monthly or periodically, whether it is rotating or it's installment, right? So if you don't have the credit, so you probably log into Equifax or TransUnion to check your credit and it says you have a 0 credit score or you have insufficient information on which to develop a credit score. In this case, or your credit score is low because of the newness of the credit lines that you have. In this case, CMHC will allow you to use alternative ways to prove that you're credit worthy. For some people, and some of the things that can be done is that you can, one, get a letter from your bank in the country that you were living before. And this letter has to speak to your credit worthiness and your credit history. Two, if you were living in the US, which uses the same credit bureaus that we use, which is Equifax and TransUnion, then that they'll allow you to use that, right? All right, so as it relates to developing to proving your credit worthiness, another thing that can be done is that you can get a letter from your landlord if you're renting and also present a copy of your lease along with proof that you have been paying your rent on time every month, right? And that way, usually if you have been renting for more than a year, you can present 1 year to show the consistent payments going in. So say your rent is due on the 1st and you'll show that, yeah, here's my lease. It says that I'm renting at whatever location it is. And I am paying whatever amount I'm paying. And then you use the bank statements showing those payments going to the landlord or to the management company every month around the 1st. If the 1st is a weekend, the next business day. And you can show that, and that can be used to increase your credit. Sometimes as simply as having a cell phone and showing that, yeah, you have made your cell phone bill payments, and this has to be the postpaid cell phone now. Can't be the ones that you just log on and make up and add money to the phone from time to time. It has to be where you are trusted with credit, because what you're trying to show is that you are trustworthy as it relates to credit, and that you will be able to repay and stick to your obligations, stand up to your obligations. Right. So let's look at some of the types of groups, or we group persons in terms of who they are and what they can get. So for non-residents, and the law has changed a little since the 1st of January 2023, where it's now more difficult for non-residents to buy property in Canada. So for non-residents, you you must be legally authorized to work in Canada. Right? So what this is saying is that, yeah, you have to have a work permit to be able to buy a property. Plus, you are with the new rules, and I'm no expert on the new rules, as I am no lawyer, I am a mortgage broker, right? But based on what I understand with the new rules, you have to show that you have filed your taxes. I think it's for a minimum of 3 years or 2 years. Don't quote me on that one, but you have to show that you have filed taxes in order, no, along with your work permit, in order to be able to buy a property in Canada, right? So you have to be legally authorized to work. You have to show that you have paid your taxes, right? And you have to show that you are worthy of getting credit. And again, for persons who are coming from the US, that were living in the US, yeah, we can use the report from the US, and that one is accepted, or any other internationally recognized credit bureaus that CMAC will recognize, right? But for persons from all other countries, for persons from all other countries, it's a bit more difficult, right? Because what will happen is that because the US and Canada are so similar, and we're pretty close in terms of geography, and what happens on one side of the border, it's pretty close. It's different, but close. So they will get that amount of leeway. But persons coming from other countries that do things very different from what it happens here, that now becomes a little bit more complex. So, as I mentioned before, what can happen? You can get a letter from your financial institution from the country that you were, and that letter from the financial institution has to speak to the level of credit worthiness that you're at, and it cannot be where they say, yeah, he had an account with us and he had it for 5 years and his balance was X, Y, Y, Z. No, it has to be that, yeah, he is credit worthy over the years that he has borrowed from us or has utilized credit cards or whatever the thing is. He has proven that, yes, he is excellent at repaying. There were no issues, things like that, right? Right. So, beautiful. Just to remind you that you're listening to Talking Mortgages. My name is Oral McLean, the Mortgage MC. We're on HGG Radio. The numbers to participate is 825-343-4486. Our topic for today is new to Canada mortgages. But as usual, if you have any other questions, we will entertain them. Right. So, eligible borrowers who can borrow money or borrow a mortgage under the New to Canada program. Of course, Canadian citizens, permanent residents, and non-permanent residents who are legally authorized to work in Canada, right? In terms of how much money you can borrow, that is pretty clear. In the loan to value, or how much money you can borrow after the deposit is made or your down payment is made, is that for if you're buying a property that has 1 to 2 units, so a property with 1 to 2 units would mean that that property has like a basement suite and the regular section that is on your main floor or on your main and second floors, right? So that's 1 to 2 units. If you're buying 1 to 2 units, it's up to 95%, meaning that you are allowed to put 5% down in a case like this, right? If it's between 3 to 4 units, the loan to value is 90%, meaning that if you're buying 3 to 4, a multi-property building, probably like a fourplex or a triplex, what you have to do is that you have to put 10% down, minimum of 10% down. For small rental loans, meaning that you as the owner won't live at the property, and you're just going to be renting it, the loan to value for these 2 to 4 units is up to 80% loan to value. That means you have to put 20% down. All right. And if you are a non-resident, you can, and you're buying under this program, you are allowed to buy a single unit, non-rental. It must be owner occupied, meaning that you buy it, you have to live there, and it has to be a single unit if you are a non-resident, right? So you don't have PR, you probably just have a work permit. You prove that you're authorized to work here, and you prove that you have paid your taxes and all that. Yeah, you're allowed to buy one unit, non-rental. Plus, in terms of the length that you can have this loan, the maximum amortization, meaning that the maximum length that you can, the maximum amount of years that you can take to repay this entire mortgage has to be 25 years. Plus, another thing that is not popular that people don't know is that when you're buying under this program, the cost of the property that you're buying should not, in most cases when you're at least non-resident, should not exceed 4 times your annual household income. So all the persons in the household that are chipping in to do this mortgage, when you add all their income, should not exceed 4 times that income. All right. So as it relates to down payment can come from such sources as savings, sale of another property, a non-repayable financial gift from an immediate relative. Usually immediate relatives is mother, father, brother, sister. And in the case of rentals, where the property is owner occupied or non-owner occupied, as I mentioned before, if you're a non-resident, you are not allowed to buy that. You can only buy what is a single unit property. All right, so that's for the loan to value. All right. Other eligibility requirements for applicants to this to all of this program. Minimum equity requirements for home loans. The minimum equity requirement for units that are for properties that are 1 to 2 units is 5%, as I mentioned earlier, and that is for the first 500,000. Anything above that, the value goes up for the additional whatever. So if you're buying 550 or above, then it goes up to 10% for the additional. If you're buying 3 to 4 units, the minimum equity requirement is 10%, right? And for small rental units, the minimum equity requirement, as I mentioned earlier, is 20%. And of course, the purchase price, lending value, and amortization. Amortization is 25 years. And the maximum that you can get to borrow under this program is anything below $1 million. So you can get $999,999.99, but you cannot get $1 million. All right, it has to be below $1 million. So it sounds like you're going to be buying in the Alberta market. You're not buying in Ontario or BC, right? Because you probably just, what you get for $999,999.99 is not going to be a lot in those markets. All right. So again, we'll just let you swallow some of that. In the meantime, do some digest it a little. Let's hear our theme song for a minute, a couple of seconds, and I'll give you a chance to start formulating your questions. Remember, the number that we use, you can contact us via WhatsApp at 825-343-4486, and you can ask us any question on the topic or any other topic relating to mortgages. And we'll be more than happy to answer that question. So we take a quick break and we'll be right back.
Busy trying to make ends meet, no time to go down on my knees to pray, but still God gave me grace. I cannot allow this situation to get me down, no way. So I get up, shake myself and speak into my life. It's gonna be alright. I'm gonna smile. I'm gonna try. To the end, I'm gonna fight. I can do all things through Christ. I'm gonna smile. I'm gonna try. To the end, I'm gonna fight. I can do all things through Christ. Sun starters feeling down cause daddy's not around. They don't know why. Feel rejected inside. Broken families, broken homes, painful memories like no hope, and you feel like.
All right, so we're back. And before we go further into our topic, we have a very good question from one of our regular listeners. Thanks, Princess, for your question. And the question Princess is asking is if your credit worthiness or your level of credit is not up to where it should be, if getting proven alternative source of credit can apply to somebody who is a newcomer or somebody who has been here a while, right? So and the part that the example Princess used in her question is like that letter from the landlord and using your lease and showing your payments for your lease for your rental, if that can apply to newcomers and others. Well, here's the thing with this program. This program, you're considered, and that's a beautiful question, Princess, because I almost overlooked this very, very important piece of information. This program usually considers a newcomer to be somebody that has been in Canada for less than 5 years. So while it has no minimum time for you to be able to buy, it has a maximum time that you can be considered a newcomer under this program, right? Because listen, you might be in Canada for 10 years, but you're still a newcomer, right? Of course, but this program considers you to be a newcomer if you have been here for less than 5 years. And that's the unfortunate thing, right? But I must add a rider to that, because say I've been here for 5 years and a month. While there's a cap, that the cap is not a rigid cap, right? But it can't be that you have been here for 6 years, right? Or 6.5. If you probably go over by a month or two, we probably can make an argument that, listen, this person has been here, it's just over 5 years, and during the time, based on whatever else. And I had one client that went over like by a month, and based on their religious beliefs, there are certain things that they did not utilize, right? Because some religions don't believe in paying interest and stuff like that in certain instances. And because of that, they didn't utilize like credit cards and things like that. Plus, it's not in there. It's culturally for them, it's not something that they do, right? So we were able to still get them under the program and utilize the letter from the landlord along with the lease and showing proof of payment for the rent on a monthly basis for 1 year. And that was good. So thank you, Princess. But 5 years, you're no longer a newcomer. You are from day one to the end of 5 years to utilize all of this, right? And another key piece of information is that if you have been here for less than 5 years and you have established credit, and this is coming from Princess' question, this is reminding me, if you have been here for a while, but less than 5 years, and you have established credit, but your credit is not as high, to be considered under the program, you need to have a minimum credit, and I'm trying to remember this off the top of my head, but I think you need to have a minimum credit of 650 to be considered under the program, at least. Right? So if you've been here like for a year and a half and you have credit cards and you have a car loan and things like that, and there is a score for you at the credit bureau, but it's just that you probably need a bit more time in order to get up to the 680 or above, but you're at 650, you can be considered under the program. All right? Okay, good. Minimum equity requirements for, I'd gone through that. For small rentals, 20%, I'd gone through that. Minimum $1 million, maximum $1 million. Oh, well, we were done. We were done. So thanks, Princess, for that beautiful question. And if we have any other questions, we have a couple of minutes we can answer. But our mortgage tip of the day, if you are employed part-time, your income, and we are calculating your income, we will calculate your income using an average of 2 years, using your T4s or notice of assessment. Hence, you have to be with your current employer for 2 years to qualify to use your income for that employer if you are employed part-time. So for part-time income, 2 years with the employer, and we use a 2-year average where we add year 1 and year 2, divide it by 2, and that is what we use for your income. And the source documents for that is either your T4s or your notice of assessment. Right. So they say time flies when you're having fun. And we were really having fun today because we looked at what newcomers can do. And, the key elements of this program, there's no minimum time for you to be able to utilize the program. You can come on day one, you utilize it. If your credit score is not up to where we want it to be based on your newness to Canada, then we can use other alternative source of proving your credit worthiness. And we do that with a number of things like your lease, your cell phone plan, things like that, right? And of course, the maximum that you can buy at is just under $1 million. It must be under $1 million. And you can put 5% down if you're buying 1 to 2 units. If you're buying 3 to 4 units, it has to be 10% down. And of course, the cap is 5 years. After that, you're no longer considered new to Canada. And I guess that's it for today. So again, thank you for joining me. It was, as usual, interesting. I hope you were informed and you picked up a few new things. If you have any other questions outside of this, you can always go to my website and post your questions. My website is themortgagemc.ca, or you can send me a text, WhatsApp, call, whatever it is, to 780-200-5229, and I'll be more than happy to answer any questions that you have about anything as it relates to mortgages. All right, so Oral McLean, the Mortgage MC, signing off for Talking Mortgages. This has been HGG Radio. We'll see you again next week, same time. Until then, you walk good. Can we talk? Can we talk about mortgages? Yes. Securing a mortgage should be the most fulfilling experience of your life. However, this process sometimes can be a little confusing and indeed frustrating. How is it that we improve on that? Simply join me, Oral McLean, the Mortgage MC, on HGG Radio, Tuesdays, 7 p.m. Mountain Standard Time, as I provide you with simple, professional, and unbiased advice on securing a mortgage. Let's talk about mortgages. Yes, Talking Mortgages. See you soon.